What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is July 28th of 2022. We are back in action, team. I was actually in Long Island really for the past month or so. I've been on this crazy saga where my parents, their house, unfortunately had a minor infestation of rodents, and we were basically taking care of it. We had a full renovation that resulted from it. We had to gut a few rooms. In the past couple of days, it's been a full sprint. I've been in New York on like a weird sleep schedule, a weird work schedule, and we were just putting the final touches on everything. And I was really just putting my heart and soul into that. I'm actually going to show you a couple of these photos. This stuff is crazy. So we had to gut like a bunch of these rooms, and it's pretty crazy stuff. The rats were like everywhere. You can see like rat feces in the insulation. It was just absolutely disgusting. Had to fully gut out the kitchen, gut out a few of the rooms. It was an absolute nightmare. Then we ended up with a really nice kitchen, rodent-free at the end, but the process was almost a full month. It's pretty stressful, not gonna lie. And I'm just super glad to be back in PA. And honestly, glad to just be back in the daily workflow. So we're back with these market recap videos. Thank you so much for your patience. You guys are all awesome. Thank you so much to all the Pristine Capital members for really just hanging in there while, things got crazy for me there for a couple weeks. But with that said, let's dive into the good stuff. Let's talk about these markets. We've been away for a few days, so let's dive right in. S&P 500, as measured by the SPY, finished up 1.25%. Our NASDAQ QQQ was up 0.98%. Our IWM small caps were the leader for today at 1.37%. Our dogs of the Dow were even up a full percentage point. And our ARK Innovation ETF was a laggard, down 0.43%. The ARK Innovation ETF, it's basically a portfolio of growth stock former leaders. And you can see volatility came down across the board. We did have some pretty solid breadth. We had up volume of 74.3%. The trend model remains at a +3. We did have a dip early on in the session. Meta actually reported some weak earnings, and that actually finished out the session red. It was really interesting. I was on a Twitter space. It was like a live trading space. A lot of the people in that space, they're kind of like huckster day traders, not going to lie. And so it was interesting. Seeing a lot of people in the space, they're kind of like nervous about the market because the market was down like 0.5% to 1% in the pre-mark or in the during the session. To be honest, yesterday was just such a powerful day to the upside that even though we had a dip this morning, it was really nothing in the grand scheme. Pretty much everything finished out very nice and green today. And it seems like right before our very eyes, we're having a Fed pivot that I don't think many are really acknowledging. This is typically what happens every time the market bottoms, team, where the market always bottoms when the economy is the worst, when all the headlines are bad, because the market's forward-looking. And really for people that are like non-market heads, or maybe they're new, or whatever it might be, it's really tough to wrap the head around the fact that the news is going to be horrible, and that's really the best time to invest. And I think people are just coming around to this fact now. But the reality is all of these indices, they're already up over 10% from their lows. A lot of the best stocks in the market have already doubled off the bottom. And we've really just had like 2 months where it's been like open season for bulls to just be bullish. And that's about that. So yeah, I think now we're going to start to see a lot more like, oh, the bottom is in. Like, I think now is a great buying opportunity. But it's kind of funny, like the market, it's already way up from the lows. Solar stocks were up 7.51%. Those are our big winners for today. And we had utilities that were leading as well, up 3.59%. We were long ENPH. We got long the ENPH common shares. ENPH is the true market leader within the solar space, and is due to a lot of our work around earnings insights. So we're building out some new tools to really just monitor earnings and see what companies could produce. Style factors. We had the high beta style factor up 2.29%. We had the growth style factor up 1.6%. Let's take a look at these markets, and then we'll take a look at some of my trades for today. So the ES, this is huge. This happens like clockwork every time. S&P 500, we got a breakout from this monthly value area, which is good. We're above the short-term key moving averages. The 20-day simple moving average is on the verge of crossing above the 50-day simple moving average. All good things. But look how far extended away we are from the 5-day EMA. Look how far away we are from the 10 EMA, the 20-day simple moving average. So like clockwork, typically what happens is most investors and most traders, they get very bullish as we get very, very extended away from these short-term key moving averages. And then as we pull back into them, which is really where you want to be buying and accumulating, that's where people get nervous. They start dumping their positions. They lose faith in the rally, that sort of thing. So I want to make sure that I'm maintaining some level of discipline and I'm not lunging at the markets as they get this extended. Now take a look. We have our NASDAQ, very strong performer as well. NASDAQ up 1.17%. Nice after hours move. We had some earnings come out after hours. We had an Amazon report and we also had Apple. And it does appear that both of these names are doing pretty well in the after hours. Let's take a look at Amazon. And I know there's questions as to like, well, why is Amazon up in the after hours? And to be honest, it's really just look how far down Amazon is year to date. Amazon, is it going out of business? No, Amazon makes a ton of money, ton of cash flow, ton of earnings. And this company's, as of right now, standing the test of time. So it's really just like, hey, if we think the worst is over for the economy or for the Fed and what they are doing, then, hey, let's bid up Amazon, that sort of thing. Same thing with all these FANG stocks. They're great places to be if you think we are in a recession, because it's not like Amazon's going to go out of business or something like that, like a small fledgling company might in a recession. So yeah, Amazon looking pretty good in the after hours. We are up to $139.39. Let's take a look at what Apple is doing after hours. Apple, take a look at this. We put in a nice hourly candle. We're trading at $162 a share. And you'll notice a lot of these FANG stocks now, they're only like 10 to 15% off their highs. So that's naturally the way it goes. The market climbs a wall of worry. And by the time people say that the bottom is in and it's okay to start investing, you'll notice it'll be like, oh my God, these FANG stocks are trading back at their highs. So it's really crazy. That's why it's very important to have a process that'll take you into and out of the markets. That's why we use the trend model. That's why we use our bottom-up analysis. That way we don't have to worry about the talking heads and that sort of thing. All right, let's take a look at my trades for today. I had one fantastic trade and one basically a horrible trade. So let's dive in here. ENPH. This is a stock, we did not do a recap video yesterday, but all Pristine Capital members, this is something they're getting all the trade alerts in real time. And ENPH is a name we've done a ton of work on. ENPH, we had a really nice options trade. We took this stock from about $180 a share all the way up to about $220. And then we also bought ENPH right after it reported earnings. So you can see this was like 2 days ago. I got long the ENPH common shares for $226.90 in the after hours. They beat on their earnings and sales, and they raised guidance, which is not really happening for many companies due to this recession that we're in. Yeah, we got GDP figures out. It's basically confirmed that we're in a recession. So yeah, that really just is what it is. I know some government officials are trying to say we're not in a recession, but it's basically the equivalent of like, let's say like someone were to like run up to you on the street and punch you in the face. You know that you got punched in the face. It's as if the government were to say, hey, that person did not punch you in the face. The government might be telling you that you did not get punched in the face, but you know. So yeah, it's basically the same exact thing for this recession. It's always 2 consecutive quarters of negative GDP growth is a recession. If the government wants to say it's not, they can say whatever they want, but we just know the truth. Take a look here. So yeah, ENPH, We got long the common shares in the after hours. I ended up piecing out of most of this stock during the session, and this is really just as textbook as it gets. I've noticed as I've looked at my statistics in my trading, my best trades come from trading earnings, and they come from trading after the earnings print. Now, we noticed a few things with this stock. Like, let's just pull it up in MarketSmith. Check it out. ENPH. So this stock, it's in a leading industry group, which is solar energy. It is a really high relative strength rating. Look at the earnings growth. Look at the sales growth. This thing is an absolute juggernaut. And it was pretty much trading in like a nice volatility contraction pattern where there really wasn't much in the way of overhead supply into the earnings print. So check this out. This is a really good teaching point here. If a company basically has no overhead supply, like this is what we did into the earnings report, you can see we got a nice little consolidation. When there's no overhead supply, that means pretty much everyone in the stock is winning on the stock. There's not really much reason to sell. When you pair that with a really good earnings report, suddenly you can get a very nice power earnings gap. And we entered this stock in the after hours and got in at a better price than even where the stock opened. And we had the really nice one-day move. Then we got the headline that the stimulus bill was coming out, and that's going to benefit these clean energy companies. And that really just took this rally to a whole nother level. So I sold some as we hit this pretty close to this 285 mark. I sold some at like 282, some at 280. And I'm still holding about 30% of my position. But we got over a 20% move within 2 days. So if you annualize that, that's going to annualize to like a 1,000% return or something insane on the year. The odds of ENPH putting in another 20% move in the next 2 days are super slim. This stock's very overextended from the 5-day EMA. So that's why I took off 70% of my common shares. If it pulls back, I want to remain involved and I'll probably add those back. But yeah, I just saw this as way too good of a selling opportunity to not go ahead and pull the trigger on that. And that's really the daily work that we're doing at Pristine Capital. Our goal is really just to have some differentiated analysis and trading. It's not just like, yeah, we're just hooking around some call options, man. Like, you know, that sort of thing. Like, we really want to do our data science work, make sure that we have these statistical edges and really just exploit them. And this was a prime example where we did all the homework, everything came together, and we got the really nice 2-day move. Now, let's talk about the other trade that I did, which was a not good trade. So let's see, we had ENPH, close more of that out, nice sequence. In terms of options trades, I got long some SPY put options towards the end of the day. I took a target in those at 781. I had paid 758 because I do think now we're starting to get a little bit extended from those key moving averages as we mentioned earlier. Now, my bad trade, I got long some Roku August 19th, 94 strike calls. Those, I just literally wrote them off right after Roku reported earnings. These are going to expire worthless. I'll probably be able to pull, maybe $1 out of them, maybe something like that. But for all intents and purposes, basically going to expire worthless. I had paid $9.95 for these. And I put here, this cancels out one of my big winners from last week. I have no edge trading stocks into earnings. I found when I looked at my statistics, I have no edge. My expectancy is actually negative when I trade these stocks into the print. But I have a large edge trading them after they report. And that's actually, again, my best setup. So I put here no more pre-earnings trades for me. This is the last one of my career. And this is very disappointing for me. I hate putting on trades. Like, I lose trades all the time. But this one I would really put in the category of just poor process. I got long Roku because Snapchat reported really weak earnings. And Snapchat really took down all of these digital advertising companies. And so I thought, hey, a lot of these other companies are better than Snapchat. That's like the worst in the group right now. And let me buy the dip in some of these. But Roku ended up reporting earnings. Again, it doesn't matter like how much they went up or down because I have an options position. But yeah, this one really got crushed. So it really just goes to show, like for me, that whole thing of just like, yeah, I got a feeling about this one stock into earnings, like that sort of thing. There's just no edge in it. I want to make sure that I'm always trading with an edge. All of my trading heroes, trading legends, former U.S. investing champions, none of them are doing that. It's all just, we need to trade process. We need to be very clean in what we're doing. And for pretty much every champion trader, their scope is narrow. The average retail trader, they'll trade anything where it's like, hey, this chart looks like it might go up. This looks decent. Oh man, this one went down a lot. Maybe it'll go up. Oh, this one is a catalyst. Hey, let me bet on that. Like, it's just very much like, they're like, oh yeah, I saw this one got posted on Twitter. Hey, that guy seems smart, whatever. Like, there's really just no rhyme or reason. It's just kind of like throwing things out. The professional trader is really in tune with what works best for them and what their real trading setups are, and really just sticks with it. There's no just like, hey, I got a feeling. So this one, I would say, like, I put it in that category of just like having a hunch and trying to trade off of it. Into earnings, you can really get crushed that way. So yeah, for this one, I actually added an additional rule into my trend model rules template, and I literally wrote down, no more trading stocks into the earnings print. It's not the end of the world, but all it does is it really just undoes some of your hard work and your analysis and your wins from other trades. That's super important. If you put on these trades where you don't really have much of a trading plan, you're undoing your progress. You're undoing your good trades. So for this, to be honest, the past month has been a whirlwind for me. I've been in just like moving from hotel to hotel, that sort of stuff. Been on the go, on the fly. For this one, I'm just going to go ahead and forgive myself, move on. Tomorrow's a new day. But I want to make sure I just iron these trades out of my process. These are pretty rare for me at this stage in my career. But it's just super important to acknowledge when you get one like this. Hey, let's nip that in the bud. No more of that. Boom, you move on and you're good. So yeah, that was the Roku trade. And yeah, heading into tomorrow's session, let's take a look at what we got. Markets are definitely a bit extended to the upside. We have the 5-day EMA below us. So for me, I really think I want to just continue to stick with the earnings trades. That's really where it's at for me. Take a look here. We do have some companies that reported. Let's just check these out before we break for today. And where are these? Yeah, these are our post-market movers. So we see Amazon 5.9 is another one that reported strong earnings. So that could be one to check out tomorrow. But yeah, I want to make sure I'm not lunging at anything. That's probably the worst thing that I could do tomorrow. And yeah, just stick with the process. One other thing is the seasonality for August is very, very choppy and quiet. So I want to make sure that I'm not transacting in primarily options. I want to make sure that I'm trading primarily stock as we head into August. With that said, thank you so much for watching this video. Thank you so much for your patience while we've been away. If you enjoyed the video, feel free, go ahead, click the like button. It does help with the algorithm. And with that said, we'll see you all tomorrow.